Happy Halloween. Today is our this is our Forex blog for October 31st, 2011. And like most days, we really want to buy the most trending currencies. Our concept is we trade with a trend until the market moves too far statistically. We wait for the momentum to end and then we look for counter trend trades. But if the market hasn't moved too much in one direction, and there's quite a few tools we have that show us that, then we continue to trade with the trend. We prefer when our real-time trend tools, which is it shows the dollar, which directions is it going versus all the rest of them, and we measure 5 different tools averaged together. 3 of them measure the direction the dollar is going, for example, on the top, and 2 of them measure the intensity of that direction. So anytime you have a plus 80 reading, you can be pretty, assured that 80% of dollar pairs are either going up or down, and they're doing so with incredible intensity. A very high percentage of them can be going up, but if there's not that much intensity, you'll see strength and weakness underneath the 80 level. Trends of considerable magnitude tend to continue, whereas trends that are less than the 80 level, you're kind of gambling if you bet on the direction. So in other words, you have an incredible strength which continued for 1, 2, 3, 4.5 hours, and you have a lot of weakness followed by very little strength. That trend is likely to continue, and it does for another hour. Then you have a little bit of weakness in here for about 2 hours. There's more weakness and strength, and you got an hour of weakness again. One other thing that increases your odds of a trade is when all time frame trends line up. For example, last week the Australian was very strong, the dollar is the weakest. We'll scroll back and look at that, for last week. Friday, there was a little bit of strength in the dollar, but on days like this when the dollar is going down and the intermediate time frame trend's down, the daily trend down, which is underneath that, the weekly trend is down, and the monthly trend is down, you pretty much have no-brainer trades. Last week, many days were very easy to trade. When the real-time trend, like today, is against the weekly and monthly trend, your odds are a little bit less, and you can anticipate making less pips on trades that do work, and you will have more losses. That's just the nature and the common senseness of how our tools work. Now the weekly and monthly trend of the Australian is still strong, and we have at 2:30 here a lot of strength followed by very little weakness. Because the longer time frame trend is up, that trend is likely to continue, and it does for about 40 minutes, right around 3 o'clock. At 3 o'clock you can see the dollar had the last move of the dollar was down with a lot of intensity, followed by at 3 o'clock it's safe to assume the dollar is going to be weak because the weekly and monthly trend's down. The yen, on the other hand, right before 3 started to show some strength. So the Australian dollar could have been a trade you took last night. Australian strong on all time frames, the dollar is weak on most of them at 3 o'clock right here. And let me scroll forward here. This one's underneath the lower containment bands. It rallied up. If you had shorted right here, you probably would have had a small loss. Let's bring up the range charts because it's a lot easier to trade on a range chart than regular chart. And so we'll scroll this back to the 3 o'clock time frame. Coming up to 3, you can see this is still right near the lower 2.0 band, which basically means underneath that white band the market's more likely to reverse and continue. As you can see, it went down, hit our 3.0 band, which almost always is the end of the move, retraced back up about 40 pips. It's not, you could consider this statistically down too far, but if you did short right here, you'd have a small loss, and usually you're better off waiting for a 2-wave pullback. You can see it came right up here. We have a counter trend signal. This is a much better place to short. Coming up to about 340, it fell about 20 pips, or 30 if you held on down to here. If you get into a trend trade a little too early, you'll tend to have more losses. That's why we have these statistical bands on here. It's okay to short at or above the white band, but it becomes much riskier to short underneath there. Obviously, trends of this magnitude tend to continue, but that's not always the case. Let's look at just trading with the real-time trend today. You can see last night the dollar was the strongest of all the currencies. Let's find the weakest one last night, Sunday coming into today. The Australian, very weak. The yen, obviously very weak. So buying the dollar yen, selling the Australian dollar up before midnight obviously was a no-brainer thing to do. Looking back on the range chart again, coming up to midnight, this is our build your own trend tool, which really shows you phenomenal trends. Anytime you have a trend that's down with this much weakness, you get a counter trend move up with no strength, it's pretty much a no-brainer. You can use our trailing stops to get in and out of the trade. In this case, you have been short at 17, out at 02 for about 15 pips minus your spread. Short again here at 93, out at 59. So you made 30 pips on that one, 15 on the other one. And again, it's riskier and riskier to short when the currency is underneath the lower band. But if you see extreme weakness like this, and there's any kind of fundamental reason at all, you can take a shot and draw your fibs on there. When it's underneath the lower white band, markets rarely go, and I say this again, markets rarely go below the 1.382 Fibonacci profit target. So if you had shorted here, you certainly could have exited here, but you're not going to want to hold on to your trade once it hits this fib target. It's underneath our 95% likely maximum low of the day. Looking back over the last 20 days, our containment bands find the most extreme volatility and plot that on the bars today. This one has about a 85% chance of being the max low. This is about 95% chance. So when it's underneath there, any sign of the weakness disappearing or lessening like this, you can do some counter trend trades and you can see it went up 50 pips there. That's one of our counter trend methods. And it gets back to what I said at the beginning of class. We trade with a trend until the market moves too far, statistically too far, then we look for counter trend trades. So the dollar was extremely strong. You don't know that the trend has reversed until you see a lot of weakness followed by the counter trend move having less strength than weakness. At 3 here, it's pretty safe to assume the dollar will continue being weak because the weekly and monthly trend is down. And typically when you have a lot of strength like this, if the weekly and monthly trend is down, you typically don't have strength more than an hour to 3 hours. This one was quite long, 1, 2, 3, 4, and then another half an hour of strength right here. So at 2:30, or actually I should say after 3, it's pretty safe to assume that the dollar will be weak again. So which currencies again are the strongest then? We already showed you the Australian dollar, which was down statistically too far, and that's why that trade didn't really work out. We also have the CAD with a lot of strength followed by a little bit of weakness. The weekly and monthly trend is up in this case. The New Zealand, same thing. The weekly trend is quite strong. It's the second strongest other than the Australian, and the monthly trend is up too. You certainly could look for New Zealand dollar sells as well. I'm sorry, buys. Now as you can see, the strength never came back in this, so you would have a loss. But let's just bring up the currency pair just to show how you handle trades that don't work. Again, the New Zealand longer time frame trend is up. As you can see, the weekly and monthly trend's up. Let's scroll over here and look at this coming up to 3:30. This is a little bit better trade odds-wise because the currency's not at or below the white band. It's considerably higher. And typically when a currency has a counter trend move, it will make at least 2 waves up. So I'll draw my fibs on here. And typically at the first or second fib target, you can get into a trade. Now let's say you took every trade. Here it came up to the fib target. We have a weekly pivot resistance area right here. If you went short, for one, it's a little bit riskier to go short when the trailing stop is showing you that our system is long. But if you do, you want to put your stop right above the high by a few pips, and you would have been short here around 34, out at 38. If you had gone short again here with your stop above these bars high, it kind of came down and went sideways, you might have been out with a small profit, more than enough to get back that 6 pip loss. You go short again here, and you get out when the trailing stop gets hit, out at 08, short around 27. So you can see you made about 20 pips here. You might have made 5 to 12 pips on this one, and you lost 8 to 10 on this one. So you might have had a small win, small loss, and 20 pip win. And that's really the secret to trading: small losses, big wins, and that's really all there is. Now here the dollar has, or the yen has, incredible strength. but the daily, weekly, monthly trend is considerably down. You really got to be careful when you're trading, when the real-time momentum is against here. That makes trading harder. Here's a good pattern with the pound. A little bit of weakness throughout the day, but not multiple hours like you have in the euro. A lot of intense weakness, and then it disappears. You have strength followed by very little weakness. At that point, it's very likely that the pound strength will continue back. The same exact pattern you saw here on the New Zealand, where this one failed. This one, the strength does come back. And most of the time, the strength does come back, and you're able to profit off that. So at 9:30, which currency really is the weakest one? The daily, weekly, monthly is the weakest with the pound, with the yen, but it just had a momentum streak to the upside. Really, one of the most consistently weak ones throughout the day and gave no sign of strength at all day was the euro. So the highest odds trade really that I would have probably been looking for is the euro pound. Weak euro, the pound's likely to continue its strength. Let's just bring this currency up. We'll just bring a 5-minute chart up to show you. And look what happened. Let's find the exact time that happened. 8:30, there's a lot of strength, followed by at 9, there's no weakness. This was showing decreased levels of intensity to the downside. Right around 9, you're looking for a trend down. So you have a pullback right here. A lot of times when the market's making lower lows, you draw your trend lines underneath the bar's low and you go short. Now, myself personally, when the market made a lower low and went sideways right here, I would have put my stop, right above these areas right here. And unfortunately, the market really never continued up, so you have to get it short again, and then it just went down from there. Humongous trend down, and it only takes one nice trade like this where you catch 100 pips to get rid of a ton of 5 to 10 pip losses, and that's really the key to trading. You don't know if any individual trade is going to work, but trust in the fact that if you always have small losses, a bunch of break-evens, half-size losses. Remember, if you have a 10 pip initial stop and the market goes 5 to 10 pips your way, your stop tightens by 5 to 10 pips. So if you do lose on those trades, you lose half, and sometimes break even versus your full 10 pip loss. That lowers, over a series of 100 trades, that lowers your average loss from 10 or 12 pips down to 5 to 7. And you're going to occasionally catch big moves like this. You don't know what time they're going to happen. So anytime you see a pattern that looks phenomenal, like the pound did, the weakness disappearing, not a lot of weakness for about half an hour here, 5 minutes here, 5 minutes here, and then no weakness, followed by intense strength. The pullback trade had almost no momentum. That's likely to continue. You have the same exact pattern later. Incredible momentum, very little mild weakness, and at 10:30 here, that strength continued. And guess what? 10:30 right here. If you saw that same pattern on our currency meter, 100 pips. It's that simple. Again, some trades are going to be, some days are harder than others. Some days you're going to have 100% wins because it's easy. Trends just go one way all day. Other days you're going to have, maybe less than 50% wins. But you catch one nice 20, 30 pip win, you should still make money on those days.